let's start with the country that a lot of people have asked about, which is China. So based on the latest news, right, if you notice some of the headline, China actually banned the export of some key important element in building the semiconductor, which is important for the sectors. So I would like to pose this question to Jitun, because one of the key investment team you mentioned about is semiconductor self-sufficiency. So will all this geopolitical tension, export ban, will impact the investment team significantly?
Okay. I think the way that I would think about this is, I think it's precisely because of the US-China tension, then we will have this team called the China Self-Sufficiency Team. Because if you just rewind back the clock, 5 years ago, I think WTO ruled the world from the perspective that everything was all about efficiency, lowest cost, right? There's very, very little consideration given to geopolitical issues, talking about friendshoring, onshoring, reshoring, right? So I think it's precisely because of this US-China tension that we have this artificial restrictions being set up. And that's why China is going on this localization theme. And therefore, I think it's inevitable. In fact, from my perspective, I think for the foreseeable future, I think this US-China tension is here to stay. So the export restrictions on AI chips, export restrictions on the leading edge of semiconductor, this will be the new norm going forward. And I guess then the logical question to ask is, so what is the response from the China side? Right? So if you look at, from the China's perspective, there's been very little tit for tat. Meaning, I think this is the recent restriction on gallium and germanium is probably one of the rare instances that we have seen this happening. And even from my perspective, I think, these are minor metals. This is probably a starting point for negotiation, right? Because if you need to negotiate, you need to have coming from some point of strength, right? If there's no restrictions, then why are we negotiating? Because you are the only one beating me, right? So I do think that this is probably some political maneuvering as well. So going back to your questions, I do think that, like I said, technological restrictions is here to stay. And therefore, it's more important that we play the China localization team, because this is the only way China can break out of this vicious cycle. Okay?
Yeah,
Thanks.
I think exactly like what Jitun has mentioned, moving forward, it will be the new norms about all these export restrictions, but what we want to focus is on the potential of the sectors moving forward. So speaking about the tech sector, right, I do spot a question from audience as well, asking about Malaysia tech. So just now, Kan Leong, you mentioned about moving forward for the second half of this year, there could be catalysts like earning pickup for the tech sector that will close the divergence between US and Malaysia tech. So will this audience actually concerned about what if when the earning pick up, but US tech starting to see some pullback, will it pose a headwind for our tech sector despite the earning pickup?
Hello. Yeah. So, okay, basically from what we're looking at is most Malaysian investors are actually not plowing their investment into Malaysian tech sector, hence why the disparity is there. So in the event that, there is a correction in the US tech stocks, but, you're starting to see earnings to pick up in Malaysia, we think that the downside risk is relatively low because, again, you're starting at a lower base. So time and time again, if you look at the Malaysian market as a whole, a lot of times you see the US market's gone up quite a fair bit, right? This year, Nasdaq's up 30, S&P is up 15, whereas our Malaysian market's down about 7, right? So when you see the US stock market start to correct a bit because they've gone up so much, you don't see much correction in the Malaysian market. It's still relatively lackluster. And how we look at it is, Malaysian market, you cannot just solely look at just on a return perspective because, again, there are always a lot of window dressing happening in Malaysia. So a lot of times, a lot of things are in a way is made to look better. But what we look at is we look at how much value is traded every day in the Malaysian market. How's the participation like? And what we're seeing right now, it's at about 1.3, 1.4 billion every day. So that is very similar to the last previous bear markets that we see in Malaysia. So at that juncture, we see that we think that a lot of funds are already very cautious at this standpoint in Malaysia, those Malaysian-centric funds. So we think the downside risk is relatively low. But then if the earnings were to start to come in, and again, the market have to start to, have to be a conducive environment as well, right? Because, we got state election coming up, we don't know how how's the political environment will be. But if the environment is still conducive, we do think that the stock price should reflect the earnings growth that we see.
Yeah, so it seems like Malaysia tech sector is also one of the area that investor can continue to, monitor and also take a look at the sectors. So we saw a follow-up question on the geopolitical tension that we discussed just now. So this question is posed to Chicken. So we saw there are more and more companies starting to build their factories, their plants in other Asia countries outside China, like India, Indonesia, right? So are we going to foresee all these other countries become the next manufacturing hub like China, and how long will it take for it to materialize?
Yeah, I think that is a trend we're going to see for years to come. And, as this global growth slows down, right, there will be impact on the global supply chains impacting the Asia. And within Asia itself, I think we're also seeing some rebalancings of this portfolio within the economies. That's why you can see, some of these economies start to look at other growth business model. So I think it's not really a bad thing. I think, because of the lockdown in China, everybody started to realize that, they're such a powerful house in terms of manufacturing. And I think they want to do away with that. And coming from the US, they always want to see that, de-risking from China is a key priority for them. So I think a lot of countries, in a way, they do not want to sort of offense both sides. So definitely you will see some of these outflow coming from China for some of the manufacturing activity moving away from China and have some establishment in Asia. And I think in Malaysia, I think we also in one of the beneficiary of that particular trend. You can see some of these US companies start to actually build some of their manufacturing facility here in Malaysia, despite the fact that we are start to have a lot of medicals or even like electronic devices that be part of the global production change. So I think that is going to continue for a little while, and this is going to be a trend for years to come in Asia.
Yeah, I think this is also one of the key investment case for investing in Asia. So just now we've been talking about tech, which is the high growth sectors, right? So there's this audience curious about thematic investing. So it's not something that too traditional. So he would like to ask Penny, like, how different is this thematic investing compared to traditional investing, and why does it deserve a place in investor portfolio?
I think thematic investing is different compared to traditional. Where traditional, you're usually into country sector allocation and all. Theme is really, thematic is what we look for companies that's relevant to those themes and how you can actually participate in the changing themes that you already see in the market right now. I mean, if you look at something, if you see there's a theme or there's something like a pet economy, as I shared, or health tech and all. But you as an investor, how do you participate in that? With thematic investing, we put aside all those sector allocation, geographical allocation, but to those companies that will be relevant to those themes. And as investors, you definitely want to participate in those teams and those companies that will actually then again make sense to your portfolio. So that's something very different, and we are in a fast changing world right now. The world changed so much in the past 3 years in pandemic, really. And as investors, clearly, if you see something, you just want to participate on it and actually translate into profit or into your portfolio. So that's what I think.
Yeah, I think this is how thematic investing is positioning something new and different for investor to consider. So there is also a follow-up question for Penny because you mentioned about renewable energy is also one of the key themes within thematic investing. But it seems like there is a high entry barrier because you need to build the infrastructure before the company can turn profit. So how do you see about it? Does it take a long time to materialize?
Those next generation energy is really about, I think that has always been in the talk. But really, let's rewind and look back at last year. If last year, 2022, with the Russia and Ukraine tension, I think if you ask Europe, they will immediately say, we can have next generation energy now, immediately, because we don't want to rely on Russia for their gas and all those. And really, I remember my colleague was saying that from Europe, it's going to be a cold winter. Whether we have gas or not sure. So that's also, I think, yes, it will take time for those companies to make money. I mean, even tech company, high growth, you invest in it, they may not be making money immediately. That will take some time. But I guess the theme is, the next generation energy theme is still relevant. It is not something you just talk about 1-2 years and then that's gone. It's going to be continuous. And we will take time. And there's also the Inflation Reduction Act in US where, they actually help those companies, or they give tax rebate to companies that goes into all this renewable and all these things. And I think that will catch up also in Europe. So I think, yes, maybe some of the companies may not make money now. They may take some time. But I would think that the theme on next generation energy will still be a talk globally everywhere. So that will be relevant.
Yeah, totally agree with you, Penny. So I think investment itself also should be more forward-looking. So instead of looking at current situation only. So speaking about renewable energy, clean energy. So just now, during Zichun's presentation, you mentioned about EV batteries, how Chinese companies, their dominance in terms of these sectors. So this audience would like to know about how about the front-end player, like those BYD, Tesla, because like Tesla, they have been slashing their margin, right? So does it mean that investors should focus more on the raw material, that kind of side?
Yeah, I think that's a very good question. I guess from my perspective, the answer is yes. It's easier to just focus on the supply chain. Like for example, I think during the gold rush, right? I think the guys who made the most money are the guys producing the jeans, the shovel, right? They are the ones we know that in terms of volume, those guys, their volumes will go up. But are you going to pick the guys who is going to strike gold next? It's practically impossible, right? Especially when you come to things like consumer goods, right? I think around all the audience here, like what I mentioned during my presentation, some of us may have BM, some of us may have Nissan, some of us may have Toyota. So to each his own, right? So people are looking for different aspects when you comes to buying a car. Maybe somebody wants safety, somebody just like the design, somebody likes design. And my preference of design may be different from yours. You might like it cute, but I like it aggressive. So it's very hard. But at the end of the day, if we can find the common denominator, the common component that goes into all these cars, right? No matter who wins, I win, right? So this is how I think about it.
Yeah, so how about Chicken? Because during your presentation, you also mentioned about renewable energy within Asia, right? Do you share the same views as Jitun? And this audience also would want to know which country other than China to focus if they want to invest in renewable energy within Asia.
Okay, before I move on to that, I think I want to just quickly go back to the previous questions on, some of these EV manufacturers. I think the competition, there's a lot of fierce competitions, and recently, early this year, there was a price cut among the EV makers. But having said that, I think if you look at the size of in Asia, particularly in China, I think even though some of these EV new startup, right, they've been around for less than maybe 10 years, but having said that, I think you look at a company like BYD, because the market sizing, they've been able to really mass produce, and they're profitable right now. And not only that, there's some other like new startup, for example, Mr. Lee just talked about Li Auto. Yeah, I'm not sure, are you owning a share of it, Li Auto? Yeah, that company just recently happens to be, again, not only they break even, they're starting to make money. So we're going to see some of these very strong EV player will continue to emerge, because that segment, the target market, the segment is different. So I would foresee other players, like for example, Xiaopeng or even a Neo, in a foreseeable near future, they probably be able to sort of like break even and start to make money. And this is good news, because you can see the demand for the EV car, not only in China, but for the rest of the world. Yeah, so it's going to be very strong. And coming back to a question on the clean energy, which are the countries that are working on this? I think the next one I think we should focus on will be in India. India also have made commitment to actually really make it to build solar panel. I think on the solar manufacturing, they will continue to work on that. And for Korea, I think you can see just during my presentation, I think not only they want to make a better commitment to a clean environment, they also continue to do a lot of research and development in the hydrogen fuel cells for the car, for the EV car. So these are a lot of the opportunity we're seeing just within the Asia itself. So I think you're going to see some of these new startups start to really, really make it in the next, I wouldn't say next few years, but probably in the next decade. So I think this is the way I think at Eastspring, we focus on the mega trend and we just constantly focus on that. I mean, the volatility can be a good opportunity for us as well to pick up some of the share at a really reasonable prices. I mean, you know, for example, I mean, just a few months ago, everybody thinks that, you know, China EV is going to be gone case, but you can see how fast they actually bounce back. I think just a couple of days ago, I think there was an announcement made by all these EV makers, even including Tesla, saying that, you know, they are agreeable as a group, right? They are not going to simply do a price cut or price war going forward. I think that, that commitment, I think, is huge. I think it's going to drive some of these EV car makers is going to be a greater height from this level. You can see a lot of the bounce back recently in the new startup like, you know, Xiaopeng or Li Auto continue to have done well in the last few weeks.
Okay, thanks, Ken. So I also learned a new thing today. Like India is also one of the key players in terms of the solar panel, green energy. So let's see what are the questions that we have from the Slido. So one audience actually mentioned about the political uncertainty as one of the headwind when we do investment. So for example, in Malaysia, right, we are going to have state election as well. So is it one of the key reasons why we are seeing consistent foreign outflow on this year? And will the situation actually improve after the state election, Gan Leong?
Actually, if you look at the historical trend, right, time and time again, right before general election, right, the year before, actually foreigners actually like to invest in Malaysia because in anticipation there'll be a lot of contract announcement, a lot of goodies being handed out. But it seems like this time around, you know, with this state election, the reaction is a bit different, where, you know, foreigners are quite concerned because obviously what we saw in the most recent general election, you know, I think foreigners were very worried that we become, you know, being tilted too much on the radical side of things. So I think foreigners always prefer countries to be a bit more neutral because neutral policies are good for investments. It's more stable. So I think that's one of the concerns they have. And this state election, two areas where, you know, foreigners actually, two key states like Penang and Selangor, right? I think foreigners, what they're looking at is whether the current ruling government will actually lose seats or not. Because this is actually an indication of the future. Because for most, you think about it from a foreign investment standpoint, you know, why our ringgit is so weakening, why people are not investing, even though at 4.67, from a foreigner, from a foreign company, a multinational, for them to invest, you know, they're looking at not just, you know, 1-2 year thing. They're looking at, okay, if I want to invest in Malaysia, if I'm going to set up a facility here, I'm going to start hiring hundreds or thousands of workers. I'm going to look at whether, you know, the next 5 years, whether it's political stability. So I think that's something that they are looking at, the trend, you know, whether it's actually moving, whether our current government, a ruling government, actually can actually hold on to what they have. If they can do well in this coming state election, I do believe that it should be a positive catalyst for our Malaysian market.
Yeah, I think this is the things that we might need to continue to monitor for its outcome. So since Gan Leong mentioned about the weakening ringgit, right? So this is one of the questions that we receive a lot from investors as well. Like ringgit has weakened a lot on this year. Actually, this other than the rally within US dollar, but the ringgit actually weakened more than the rally itself. So moving forward, what could be the headwind and the tailwinds maybe for ringgit to recover?
So, so I think one of the reasons why ringgit is also weakening is because you see there's a huge disparity in the interest rates in Malaysia and the US. I mean against the US dollars, right? US interest rates are going at what 5% to 5.25, whereas our OPR is at 3%. So there's actually not just a small gap. We're talking about 2 over percentage point. And if you look at it on a historical basis, right, time and time again, right, Malaysian interest rate is always higher than the US interest rates. So this time round is a bit different. Why? Because we don't have the inflation problem. So we don't really need to actually increase interest rate at the pace that US needs to. But if you look at it from a real interest rate standpoint, actually Malaysia is okay. Well, because we don't have an inflation problem. Whereas US real interest rate is only starting to actually turn positive because, they had very high inflation rates. So I do believe that once the US Fed were to stop raising interest rates, we should start to see a bit more positive push for the ringgit. That's my personal view.
Yeah, I think this is a relieving news for Malaysian investor on the potential recovery of our ringgit. So seeing some of these questions from Slido, we do receive a question about China. Because we have the SOE reform in China, right? And looking at the market performance on the onshore is mainly really driven by the SOE. So when it comes to valuation, will it be going at a high valuation level for investor to enter now for the SOE, Jitun?
I think the short answer is no, because SOE has traditionally been trading at a huge discount to the market. So typically over the course of the last 2 decades, SOEs in general, with a lot of, I guess, government-linked companies all over the world, I think it's inevitable that to a certain extent they have to do a bit of national service, right? So be it in the power sector, steel sector, banking sector, we all understand that when the country is in trouble, SOEs come in and they try to save the day, right? So that has always been the case. So that's why SOE in general has been trading at a massive discount relative to the private sector. Like for example, SOE banks in China trading at 0.3, 0.4 times price to book, whereas the private sector banks in China are trading at 1.2 times price to book. Okay, the reason I think it's justifiable because ROE or return on equity between these two types of banks is very, very different. So as long as we are seeing improvement from the SOE perspective, we are not even trying to say that it will re-rate to the levels that we see for the non-SOE companies. So as long as there's some improvement, I think there's a lot of potential upside to be made in this sector, right? So this is very, very nascent. I think it's only within the last 2 to 3 months that investors, even like myself, are starting to take note on this. And having said that, I do think that the road to SOE reform is very, very long and it's going to be very, very bumpy, right? SOE in most countries typically hire a lot of people. The people running SOE has been government civil servants for the longest time, with probably backing informally or formally from different segments of the political establishment. So it's very, very tough to do actual SOE reforms. But nevertheless, so at least I think Chinese central government is well aware of that, and they are pushing through all these reforms. So I think that's a light at the end of the tunnel for a lot of these companies.
Yeah, just a follow-up question from myself, right?
Sure.
So within your the portfolio by RHB, right? Like how much of it is into SOE? Is it close to half of the portfolio?
No, very much less than that. So roughly speaking, roughly about 20% of our companies are SOE related. And I guess I just want to highlight that SOE is not the only theme that we buy in. So when we buy a company, we want to have multiple so-called engines going for it, right? It could be, I like it because it's linked to the growth sector, or it's linked to the energy sector, it's linked to the consumer sector. But on the other hand, if they are backed by SOE, then that's another engine for it to do even better. So typically the percentage of companies that we have in the portfolio that are SOE, most of them are in the energy sector, which obviously makes sense. A lot of them are in the financial sector, and last but not least, quite a few of them are in the utilities or the power sectors as well. So these are the high quality ones which we think we are very familiar with the management. We're monitoring them for a long time. A lot of times over the last decade or so, their hands are tied because it's national service. They can't say no, right? So right now, with a new set of policies on hand, then they can use that policy to push back, right? So we do think that there, like I said earlier, I think there's light at the end of the tunnel for a lot of these good SOE companies.
Yeah. Thanks, Jitun. I think despite the growth potential, right, it's also very important to have a diversified portfolio to capture on the growth of the segment. So other than the political uncertainty, the policy support by the government, right, some of the audience also concerned about the recessionary risk. So Penny, you mentioned about thematic investing is actually different from the traditional. So can we safe to say that it's actually recession proof when we do thematic investing?
Okay. No, definitely. You can only maneuver to some themes that would be relevant. It cannot defy gravity, like just in 2022, 2021, it was when there was a rotation. So, but the thing is, at least you're looking at themes longer term, and that would actually, when market behave a bit normally, like this year, 2023, I think then thematic investing, and you look at the themes are still there since last year. So if you really go into a recession, I think a lot of data, I'm not sure about fund manager, but from, I think a lot of data saying that it could be just a soft landing or quick one for US going into a recession in that sense. Now that's really data dependent, right? So I think the portfolio definitely, if it's going to be an equity and all, it's not going to defy gravity. But the thing is, it's more skewed towards a core, has actually it came down from a more growthy numbers to a bit more core. And if you look at the 7 themes that's in the portfolio, some of them really are relevant, like pet economy has been quite resilient. Infrastructure, that's something that you'll keep on going. Even it's recession, you still need to, improve your infrastructure. You still need to maintain that. Water and all those companies, water theme, it will be continuous. It will definitely not defy gravity. If you have, growth and you have got a hard landing in US, recession and all those, I think there will definitely be a bit of drawdown. But at least if it's going to be a soft one or not a hard landing, that will pull on. I would think that it will hold up quite okay. If you look at to the whole portfolio itself, it's more towards core, not so much into growth. So it depends. Again, an equity portfolio will never defy recessionary kind of risk, But at least the theme going forward, it makes sense. And at the moment, the 7 themes, I would think do quite okay in a soft landing kind of environment.
Yeah.
Maybe I can just jump in and just echo
Sure.
what Penny said. So I think I know there's a lot of concerns out there about recession and all that, but I think it still depends on your perspective, right? So if I don't have the theme, I don't have the stock, then if the recession comes and the share prices go down, then it gives us more opportunity for us to buy into that theme that Penny's talking about, or theme that the investors here are looking at. Maybe these themes are expensive now, but if something hits and market goes down, then it gives us another bite of the cherry. So once again, I think it's a matter of perspective. It doesn't mean that recession we should be fearful about that. A lot of it is also about, like what you mentioned earlier, having a diversified portfolio, right? And also being active about which themes that you should go in and identifying good themes that can stand the test of time. I think that's going to be very useful in terms of when you invest a portfolio and you invest for long term into your retirement.
Yeah, I think the key is to focus on the quality of your investment, to focus more on the quality side itself. So Ken, we would like to also know about, because when we talk about recession, mostly now people are talking about developed market, right? Like US, Europe. So how about the outlook for Asia? Is it not going to have a recession like people have been talking about for US and Europe, because our central bank in Asia is not hiking rate as aggressive like the developed country central bank?
Good questions. You just look around in Malaysia here. Coming here from Shah Alam, I'm taking the NKVA plus the LDP. Am I seeing recessions? I don't think so. I think everybody is going out to have a good time, right? I think Asia is slightly different from the rest of the Western country, because I think they've been impacted really by the war, as well as some of these geopolitical concerns. But in general, we don't have the sort of inflation in Asia. So I think there's no need for the policymaker to react like what the Federal Reserve is doing. I mean, I have never seen in my lifetime a Federal Reserve actually hiking the interest rate in such a steep manner. I mean, usually, in the last couple of financial crises, they've been quite steady. Every time they want to increase, I am telling you, 25 basis points each step of the way. But look at the rate hike this time around. It is not 25 basis points. It's not going to be that. So coming back to your question, yes, inflation is an issue in some of the selected Asian countries, but is not as severe as some of the Western countries like UK and US. So having said that, I think, of course, being a fund manager, we are not so lucky because in recession, you can just withdraw your money and put everything in the cash, right? And we managing a fund, I mean, what can we do? I mean, if you're running a relative return portfolio, you have to buy something, right? Of course, there are some risk management strategy or technique that we are using. For example, like what Mr. Tan said, I think you have to be really focused on the quality of the stock that you are selecting. I mean, in Asia, there are a lot of good quality growth company, Now, holding them during the tough time, I think you just have to bear with it. Even though they may not drop as much as those small cap or mid cap. So I think in Asia, I think there are enough country, enough economy, and the universe is big enough for you actually to weather that sort of environment in recessions. So I mean, what we are doing right now, of course, really, if the recession comes, right? I mean, the portfolio we run is basically the Asia Pac. I think if you look at this part of the region, I think there are a lot of good dividend yielding stock with good cash flow, with good quality growth. I think these are the focus of our investment strategy if the recession really comes. Now, of course, we will hold a bit more cash, but we wouldn't hold like 50-60%. That is really, really bad, because what if we get the thing wrong and market just rebounds? I mean, this day the rebound is scary, right? It's not going to be like very slow and gradual. It's going to be a V-shaped rebound. So if you are not invested, you will be caught. And then when you are underperformed, you will be blamed. So yeah, it's not an easy answer to that question. But I think by and large, I think most of the fund managers do have that strategy to defend if recession is really coming.
Maybe I could also just jump in. So as I guess in my position as a regional CIO, so the good thing about ASEAN is, or Asia, in fact, is 10 countries, 10 economies, 10 currencies. And in a lot of ASEAN countries, like I just want to paraphrase what Penny said. Even though we can't defy gravity, because if let's say market is down, I think we will go down together. But the good thing about Asia is our pace of economic growth is very different across the board. We have the lights of the more advanced economy, obviously Singapore, Japan, Korea. So those guys are very linked to the US, like what I showed in my charts earlier, or rather very linked to the developed markets. But if you look at our part of the world, ASEAN in general, right? Thailand, Indonesia, Malaysia, a lot of the economies are a lot more insular, right? So even though developed market is going to struggle, but if you can move money around, like what Ken said, to countries or economies that are less affected, I think they will be a bit more resilient, even though we may see an overall growth slowdown.
Okay, so speaking about the slowdown in economic growth, right? So Jitun, during your presentation just now, you mentioned about the recovery potential in terms of the consumption is still very huge given all those statistics. But reopening already happened in early of this year. So the recovery seems to be losing steam. So is it just, it takes time, or the market is waiting for some catalyst?
Okay, there's a few ways to look at things. I think I was just talking to one of our team members outside as well. So the question is the economy losing steam, right? So that's the main question that people are asking about China. So the best analogy that I have is, okay, so imagine if you are stuck in, like a Chinese stuck in your home for the last 3 years. You have always wanted, oh my goodness, I've not had 鲍鱼鱼翅, your suckling pig for 3 years. So what do? First day when you go out, you just go and whack 鲍鱼鱼翅, right, for the next 7 days. So all of a sudden, all the restaurants' revenue all go through the roof because everybody wants 鲍鱼鱼翅 and suckling pig, right? And after you had 7 days of 鲍鱼鱼翅, what do? I think I would just want simple wanton mee, right? So I think this is what we are seeing now. We have this explosive revenge eating, spending after 3 years of lockdown in China. So if you look at the retail sales in December, January, February, it's very, very high all the way until Chinese New Year, right? Then after we had our feel of or your 鲍鱼鱼翅, then subsequently you just want something light, right? Then after that, they restart again. Hey, it's been a while since I ate my 鲍鱼鱼翅. So we start again, right? So I think we are at this point in time whereby people are sick and tired that revenge eating, spending, watching movie, whatnot. So we are going back to that a bit of a lull before we carry on. So that's one. And the other thing is also related to what you have mentioned earlier in terms of tourism, right? So I speak to companies all over Asia, so people are waiting for the bus loads or the plane loads of Chinese. But where are they, right? Where are they? They're not in Penang, they're not in Bangkok, some of them in Singapore, but where are they, right? So people are asking that question. So there's a statistic that I want to share with you. So out of 100 people who had passport before COVID, okay, what is the percentage of those people who have passport now? Because we all know, right, passport will expire, right? So you are stuck in a home for the last 3 years, you can't possibly renew your passport, right? And the turnaround in zero COVID policy was so fast, so furious that very people had time to go and queue up to renew their passport, right? So the answer is, out of 100 people who had passport pre-COVID, only 30 of them have passport now. Right, only 30% of them have passport now. So that's why the rest of the 70, even though they want to go out and go to Penang to eat char kway teow, go Bangkok to eat a pad thai, but they cannot because there's no passport, right? So that's why if you look at the consumption in China, you go Sanya, right? You go to all the 5-6 stars hotels in all the nice cities in China, they're all full because Chinese can't leave the country. And to a certain extent, even if they can leave the country, if you go to the Western world, you go to US, you go Europe, even Japan, Taiwan, you will be discriminated, right? So a lot of them, and this anecdotally from my friends who are there, so a lot of them are just reluctant. They don't mind coming to ASEAN because we are okay, right? We are okay with them. Then if not, then they just spend their money onshore, right? So I think a lot of this. Scenarios actually explain the reason why there have been a bit of a slowdown. And the other thing is also that I think a lot of people have been over optimistic in terms of the recovery. So once you turn on the tap, you expect everything to be back to normal, right? So I think it will take some time. Yeah.
Yeah, can I just add on that?
Sure.
I think I remember reading an article, the queue for to get a new passport or even renewal is not very common. I mean, it's very common in Asia, you long queue, right? It also happening in the United States, And what happened is that during a pandemic, a lot of this so-called, because they outsourced to a third party to handle all this, the visa handling and processing. And during the pandemic, they all has been stopped, terminated. And now to reactivate them back takes time. Yeah. So I think even the tourists coming from US is very slow. It's not they don't want to come out. It's just that I think if you look at, I remember reading a report, I mean, you can wait as long as 3 to 6 months, to get the appointment, even for interview. So that is a long process. So this recovery is going to take time. I mean, everybody was thinking that we are living in a perfect world. The moment the economy opens up, you can just immediately go out. It's not that way. So you need to be a bit more patient to see some of these flight number to increase, the number of tourism start to come to the different part of the world. Yeah, it's going to take time.
Yeah, so if to summarize the answer for the question just now, right? Chinese, they are now eating wanton meat, but soon they will eat back bao yu, but we need to be patient, right? So maybe due to the time constraint, I will taking this last question regarding related to our home country. So Gan Leong, just now you mentioned about the interest rate difference could be one of the key reasons why our ringgit has been so weak. So are you seeing the possibility that our central bank might want to hike rate in the near future to actually support the currency?
From an economic standpoint, if they were to increase interest rate when you don't really need to, because I think our fellow panelists here did highlight that we don't have the inflation problem that we are seeing in the Western economies. A lot of things in Malaysia are still subsidized, especially back then, our petrol prices are subsidized. Now, electricity prices are going up slightly for the T1, right? So essentially, because of all these subsidies, we are not seeing the inflation problem. So we don't need to increase. If we were to increase it, everyone's mortgage payment will go up. car loan payments will go up. That will cause an unnecessary recession in the country. So I think there are other measures that Bank Negara is actually looking at in how they can interfere and defend our currency. I think one thing is to make exporters repatriate their foreign income back in Malaysia within 6 months, or how maybe try to get the GLICs or the our big pension funds to actually recuperate all their investments from overseas to bring it back to Malaysia. I think these are some of the measures that they can actually implement, but I do not think that they will increase interest rate to defend the ringgit.
Yeah, so seems like we might be approaching the tail end of the monetary tightening for Malaysia as well. So with that, we'll come to the end of this panel discussion. So I hope everyone has some key takeaway with them today. So once again, thanks panelists for their time.